Jeff Bezos to lose billions? Hey guys, today we're going to talk about Jeff Bezos to lose billions. Let's get right into it. The world's second richest man is about to lose tens of billions of dollars as a result of a horrifying share price crash. Amazon founder Jeff Bezos, who is currently ranked second in Forbes' rich list, just behind Tesla's Elon Musk, with a staggering fortune of $171 billion, could lose up to $23 billion after Amazon shares fell by up to 21%. The crash occurred shortly after the company announced that it expected sluggish sales during the normally busy Christmas shopping season this year. According to the Bloomberg Billionaires Index, if the stock market continues to fall, the 58-year-old father of four's wealth could fall to $111 billion from its peak of $214 billion in July 2021, the fifth largest one-day drop in history. Meanwhile, Bezos' net worth has already dropped to $58 billion in 2022 as a result of a broader technology stock slump that has hit Amazon, as well as a slew of other household names in the sector. Bezos' ex-wife Mackenzie Scott, who recently filed for divorce from her second husband, Dan Jewett, is also expected to lose $7 billion as a result of the recent stock decline. Scott rose to become the world's 12th richest person after receiving half of Bezos' assets in her divorce, and she quickly established herself as a serious philanthropist, donating large sums of her fortune to worthy causes. In a statement, Amazon CEO Andy Jassy noted the current uncertain economic times, but downplayed the latest plunge affecting the Seattle-based company. He said, "It's clear that particularly during these uncertain economic times, customers appreciate Amazon's continued focus on value and convenience." He then added, "We're also encouraged by the steady progress we're making on lowering costs in our store's fulfillment network, and have a set of initiatives that we're methodically working through that we believe will yield a stronger cost structure for the business moving forward." He then said, "There's obviously a lot happening in the macroeconomic environment, and we'll balance our investments to be more streamlined without compromising our key long-term strategic bets." He then concluded, "What won't change is our maniacal focus on the customer experience, and we feel confident that we're ready to deliver a great experience for customers this holiday shopping season." This year, Amazon has seen a significant drop in online growth as customers return to pre-COVID spending habits. As a result of the slowdown, the world's largest online retailer has announced cost cuts, a hiring freeze, and a halt to new projects. This comes as no surprise to Bezos, who has dealt with a number of similar situations this year. Jeff Bezos' fortune was reduced by $20 billion in July after Amazon stock fell after a disappointing earnings report. The stock dropped 14% after the company reported a $3.84 billion loss in the previous quarter. Simply put, as a result of the pandemic, Amazon's stock has lost nearly all of its gains. During the pandemic, consumers flocked to online retailers for everything from face masks and Lysol wipes to patio furniture and dumbbells, and the company's stock skyrocketed in 2020 and 2021. As the economy recovers and consumers return to physical stores, Amazon and other digital retailers will be under increasing pressure to show that they can maintain the rapid growth seen during the crisis. Amazon's most recent earnings report did little to alleviate those fears. The company's revenue growth was the slowest since the dot-com bust, and its current quarter outlook fell short of Wall Street's expectations. A new challenge has emerged as a result of changing market conditions. At the end of last year, investors began to exit technology stocks, prompted by rising inflation and the threat of higher interest rates. Oil prices have risen even more this year as a result of Russia's invasion of Ukraine in February. Stocks have fallen even further in recent days as a result of the Federal Reserve's decision to raise its benchmark interest rate. The sell-off has wreaked havoc on the technology sector, with tech behemoths losing more than $1 trillion in value. Similar figures were reported by the Bloomberg Billionaires Index. According to the index, the world's 500 wealthiest people lost a total of more than $54 billion as the market fell. Bezos' fortune is primarily Amazon stock, in which he owns 11.1%. As a result, when the value of Amazon stock dropped, so did Bezos' fortune. If Amazon's stock price rises again before he sells his shares, he may be able to recover. According to the New York Post, his fortune has plummeted since peaking at $210 billion last year, when he was the world's richest person. According to Forbes, Bezos' college sweetheart and former wife Mackenzie Scott, who received 25% of his Amazon stock as part of a divorce settlement, saw her wealth fall by $6 billion to $36.8 billion. According to a Daily Mail UK report, Bezos' net worth has dropped by $40 billion since the beginning of the year. Amazon is undergoing a stock split, which increases the number of outstanding shares while decreasing the stock price, making the stock more accessible to the average investor. The split will be a 20-for-1 transaction, which means that if you owned 1 share of Amazon before the split, you'd end up with 20 shares after the split, each costing about 1/20th of the previous price. As a result, the value of your investment remains constant, and 1 Amazon share worth slightly less than $2,450 is converted into 20 shares worth slightly more than $120 each. That's all for today, and we'll be sure to catch you all in the next one.